China has an upper middle income, developing mixed socialist market economy incorporating industrial policies and strategic 5-year plan. It is the world's second largest economy by nominal GDP, behind the United States, and the world's largest economy since 2016 when measured by purchasing power parity, PPP. China accounted for 19% of the global economy in 2022 in purchasing power parity, PPP terms, and around 18% in nominal terms in 2022. The economy consists of public sector enterprises, state-owned enterprises, and mixed ownership enterprises, as well as a large domestic private sector and openness to foreign businesses in their system. According to preliminary data released by the authorities, China's GDP in 2023 was $17.89 trillion US, with a real increase of 5.2% in 2024. Economy of China. The growth of the Chinese economy over the last 4 decades is one of the most globally transformative events of the last few centuries. Beginning in 1979, the country has radically transformed from an agrarian economy to one dominated by service and industry, and China stands today as the world's top trading nation. China's government began to play a larger role in private enterprise in the 2010s, feeding into a worsening relationship with the West. The facts. In a little over 4 decades, China went from being one of the poorest countries in the world with a real per capita GDP of only $156 in 1978 to joining the ranks of upper middle income countries with a real per capita GDP of $12,720 in 2022. The growth is particularly striking considering the country's population size, sweeping territory, and vast heterogeneity. Comparing China's real per capita GDP to the U.S.'s in purchasing power parity, PPP terms, which takes into account differences in the two countries' cost of living, China has grown from 4.1% of the U.S. per capita GDP level in 1990 to 28.4% of the U.S. level in 2022. Economy analysis. In an IMF report released in January 2024, the global financial policy body, also known as the IMF, projected China's economic growth would drop to 4.6% in 2024, down from its 5.2% growth in 2023, and fall further to 3.4% by 2028. The property market, which has historically represented about a quarter of China's GDP, has been a particular area of trouble for the Chinese economy lately, with a Hong Kong court ordering Chinese property giant China Evergrande, mired in more than $300 billion of debt, to liquidate. Also, the same analysis released on January 2024 predicted real estate investment is likely to fall 30 to 60% in the next 10 years relative to 2022 levels. China economy slowdown. China's economic growth is likely to slow down to 4.6% in 2024 and cool further to 4.5% in 2025. A Rutgers poll showed raising the heat on policymakers to roll out more stimulus measures amid deflationary pressures and a severe property slump. Gross domestic product, or GDP, is likely to grow 5.2% in 2023, meeting the government's annual growth target, partially helped by the previous year's low base effect, which was marked by COVID-19 lockdowns, according to the median forecast of 58 economists polled by Rutgers. Recent data suggests the economy is starting 2024 on shaky footing, with persistent deflationary pressures, and a slight pickup in exports is unlikely to kindle quick turnaround in weak domestic activity. December bank lending was also weak. GDP in the fourth quarter of 2023 likely grew 5.3% from a year earlier, quickening from the third quarter's 4.9% the poll showed. Consumer inflation will likely pick up to 1% in 2024 from 0.2% in 2023 and rise further to 1.6% in 2025, the poll showed. The experts from major banks and institutions see the downturn deepening in years ahead, predicting 4.4% for 2025 and 4.2% for 2026, among the ongoing property crisis, weak consumption, and challenges posed by the aging population. The average forecast for January through March quarter's GDP growth was 4.5%, on a year-on-year basis. Industrial production in January and February increased by 7% on the year, inching up from 6.8% in December. Thanks to improved production-related indicators, the seasonally adjusted quarter-on-quarter growth rate was 1.2%, slightly up from 1% for October-December 2023. Many expressed concerns about the limitations of fiscal policy measures, while the government in March signaled it was ready to lend support, including a 1 trillion won $139.3 billion special bond program in 2024. Economists said it would take more to boost consumer confidence. On the currency front, views were mixed. The won, also known as the renminbi, is expected to land between 6.9 to 7.4 per dollar at the end of the year. With an average forecast of 7.08, this would be slightly weaker than 7.0 of the previous year survey, but a bit stronger than the 7.0957 won per dollar rate set by the Chinese central bank. Making matters worse, the Chinese stock market has performed abysmally since 2022, seeing $2 trillion in losses. China continues to run a trade surplus, but it is struggling to export as many goods as it previously did, as Western countries try to reduce the reliance on Chinese manufacturing sector given its geopolitical rivalry with the US and Europe. Economists argue that boosting domestic consumer spending is the best way for the Chinese to dig themselves out of their current economic slump. But getting people to spend more money is tough when many feel as though they're already experiencing a recession. And China's government's latest plans haven't raised hopes, domestically or internationally. China's aging population is dragging down the growth of the world's number 2 economy. Lombard Oder, senior macro strategist Homan Lee, expects the rate to be 3.9% in 2026, below the 4% mark. Ultimately, 5% growth is simply not advisable for an economy that will experience significant demographic aging and economic maturation. While the economies of the world are slowing down and rising, can China's economy keep going down, or will it rise? How do we do? If we missed something, please say in the comments. And if you like this video, please give it a thumbs up and subscribe to our channel.